Good evening, everybody. This is Jeff Scott. It is 8:45 on Sunday. As you're probably aware, futures are out, and when I looked at them the last time, they actually looked pretty strong. So let's go back over to them. Oh, I hate when I do that. You can see right now they're up about 40 points. Interesting night. You have one of Trump's old girlfriends telling all, and that did not yet sink the markets. But based upon the last 2 weeks, just because they're up now doesn't mean they won't be down 400 points when you wake up in the morning. Unfortunately, that's the way it's been going. So let's go ahead and get started. Okay, it was a great weekend down here in Florida. Actually, I was out on the boat on Saturday. Had a great time with some family, and then today went to the boat show looking for my next boat. Boy, boats are expensive and they depreciate quickly. Today I called it Bulls versus Bears Decision Day, March 25th, 2018, and you'll see where I put my decision as market going up tomorrow, and I'll show you some factual data why I did that. But I do think this is still a question of what the market's going to do despite the futures. As always, for education purposes only, I'm a doctor, not a broker. I'm independent. I pay for the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. I entitled the education that I do to Be Your Own Guru. I started with canceling from O'Neill, improved by Morales and Kocher, taken to the computer by Ian Woodward and Ron Brown. George Lee is a buddy of mine from Western Canada. I'll be sharing the stage with him in a couple weeks in Orange County. Just a fantastic individual trader. Van Tharp, the god of position size and money management. And then the person that really changed my trading the most and took me from an okay trader to a very profitable trader, John Person, who is a great guy, author, mentor, teacher, has some indicators on Thinkorswim and TradeStation, now become an algo trader, which is kind of interesting as well. And that's John. My goal is to learn from as many people, from many people, I won't say as many, from many folks that I find to be intelligent, have a good story, and then come up with my own trading style, which is what you're going to see today. I owe a lot to this guy here, Ian Woodward, may rest in peace. We lost a couple of years ago. And I'll introduce you to one of his many concepts today called Ian's Boxes. I have a lot of software. I try and remember to hide my desktop so you can't see it all. I need TradeStation or Thinkorswim. Genesis is a great charting package, but I know you don't have it because it's expensive and you got to pay for data. And it's not necessary unless you do futures. And those of you that have it probably don't do just stocks. On analysis, you'll see I use mostly HGSI, complemented by EdgeRater. Yes, I do seasonality. I have a few trades a year that I like to take, i.e. Netflix in Q1, and then a number of websites that I use. Speaking of websites, this is the HGSI website. Again, I am independent. I have nothing really to do with the company except friends. Things I want to point out is a free 30-day trial, no credit card asked for, which is bizarre in this day and era. And then under investing strategies, you'll find a lot of movies, some by me, some by Ron Brown, some by others like Gil Morales. And, it's one of these places where it really is traders helping traders. And not only do we teach how to use the program, but we share some of our philosophy of trading. Now, this is one of my slides I always talk about. Where are we? Last week I said we might head up, or maybe we're going to actually go back down. And that every time we rolled over here over the last 2 years, we had a tendency of taking a move up. But is this time going to be different? And I think we saw last week that we did get a very significant correction. So where are we now? We certainly have started down this. Now, are we going to go into a deeper correction, which is certainly a chance, or is it possible that we're going to go back and head back up? So that's kind of the question for us this week. Is this a correction and it's over, or are we beginning something worse? And, when I'm uncertain, I take smaller positions, raise cash, sell premium. As we start to roll over, I start to short stock, buy contra ETFs. And, I think that those make a lot of sense right now. I'm not ready to say the bull's dead, but it's certainly been a bull that's been sick. And I was with one of my friends today who's a trader, and a very wealthy guy, used to own one of the high-frequency trading firms. And we were talking about the market. And, there's three things that you can do. You can go long, go short, or go to cash. Go to cash, you're not going to lose. If you go short and the market goes short, you'll make a lot of money. If you go short and the market goes up, you'll lose. And if you stay long and the market goes down, you lose. So frankly, the only way you're guaranteed to not lose money is in cash. So to me, raising cash made a lot of sense. Friday sector review, I know it's hard to read, but suffice it to say, red is bad, green is good. And I can't really find anybody except for maybe gold miners here and some of the energy stocks that have any green. The rest of the market is red, and it was a tough market all week, especially at the end of the week. If we look at the major indexes, let's just go into, open this up. If we look at the E-minis, a big run up to 2878.50. And one of the reasons why I was optimistic perhaps about the market today or coming this week is because we are, I don't want to do that. We pulled right down to the 200-day moving average on Friday. It looks like we are starting the day by bouncing off of it. Bounced off the 200 there, and if you go back in time, you'll see that the 200-day moving average can be support. So that would be for the bulls. This is the E-minis. Now the NASDAQ futures don't look nearly as beaten down as the Dow future or the E-minis, but we'll go and we'll do a retracement, and you'll see it's at, if I go back further to, I guess maybe around here, when we took out the 50, and this is still daily, isn't it? It's about a 50% retracement of this move. The YMs, similar to the E-minis, getting close to the 200-day moving average, and the Russell more like the NASDAQ, again at a 50% retracement. So the markets at best are at risk of falling down. When you look at the E-minis, this is really telling me a market that could bounce here, and that would certainly be nice to see, but also a market that is at significant risk. Now, in addition to this, we'll look at the dollar and the VIX. VIX with the market weak, the VIX has moved up a bit. You can see it's down a little bit on today. But the VIX is no longer at 12 like it was for quite a long time. It pulled back to the 16 range. And then the dollar continues to be weak, failing here at the downtrending 50 daily moving average. Now, if I go to look at the weekly charts, just for grins here, you can see pulling down on the E-mini, but most importantly, you can see on the VIX that we're not nearly as high as we were, but we're no longer sitting down here in the 10 to 12 range. And you can get an idea of how weak the dollar is, and it failed here again at the 200-day moving average. So I'm sure you all can agree with me that this is a market that has been weak over the last week. Now, if you look at, in Genesis, I've got a daily, a weekly, and a monthly row, and then the columns are E-minis, NASDAQ futures, Russell futures, NYSE, and Dow futures. And the point of this is we are in an uptrend on the monthly, but we're starting to break down, and you could see the weekly and the daily are all in breakdown mode, and it's pretty much across the market. Now, I look at a lot of specific internals to give me a sense of what's going on and help me predict. So we saw a flight to safety last week. Here we are, the Fed raising rates, people being concerned about rate increases, and the 10-year interest rate went down. Well, it went down because people started buying 10-year Treasury notes, And as demand of the notes goes up, the cost of the notes, the bonds go up, and the bonds are more expensive, the interest rates drop. So despite rising rates by the Fed, we had some slight moderation in rates on a flight to safety this week. AD lines have turned down hard on both the 1,000 and 2,000 type stocks. If I look at the NYSE AD line and then you look at a number of ETFs, pretty consistent, and bonds with the sell-off in the market and the increasing volatility actually broke some of its downtrend, but to me that's probably still a short-lived thing. Now, getting an idea of breadth, the number of stocks above the 200 and above the 40-day moving average dropped, and getting down to where they were with the last turnaround in the market in early February. In fact, if I look at the 3-month new high, new low, or 13-week new high, new low, whichever way you want to call it, you could see we're down near the bottom, and we are at a place where the market reverses. So whether we reverse overnight tonight, Monday, Tuesday, Wednesday, we're going to see a bounce in this market. Now, whether the bounce is much of a bounce, whether the bounce stalls at the 50 and comes back down, which is probably likely, but we're due a bounce. This would suggest it's almost imminent. The Daily McClellan, at first I looked at this, I said, oh, that's interesting. It hasn't fallen nearly as much as it did in February, and sometimes you need it to come down quite a bit before you get a reversal. But I think it's just reflecting that even though it's a new low, and it's very similar closing low, it hasn't taken out the prior January, February lows. Same thing with the weekly. Now here's some things that give me a sense of what's going on. This is EdgeRater doing the buckets, and what this shows me here that if you take all the stocks of the S&P 1500, put their Bollinger Bands on them, and look at where they are, 86% are below the midline, that would be bearish, and 35% are below the bottom of their Bollinger Bands. Since we know that about 90% of the time a stock lives within its Bollinger Bands, when it starts to get way below the bands, one might expect it to come back into the bands. And when 35% of the market is below the Bollinger Bands, that's a really oversold market. Now, I've looked at this back 15 years. Can't say I've looked at it in a serious bear market, although 7 through 9 were pretty serious. And during this uptrend, whenever we got below 25 or 30% stocks below the lower, above 25 to 30 stocks below the lower band in the Bollinger Band, the market recovered or had a big move within 2 days. That's sort of consistent with my 13-week new high, new low. Continuing on, there was no Hindi firing since the beginning of February. Most major market declines, if not all, are preceded by a Hindi or a series of Hindis. The lack of Hindi might be good for the bulls. Now, market's tone looks horrible. We need a set of kahunas across all the major indices to reverse this, and we'll see if we get it. But you could see on the Woody indicator, you have a sell signal in all the major indices. And on the sectors, the only one that has any life in it today is the XLE. Now, I have 3 indexes that I like to track. These are indexes of stocks that at one point were market leaders and were important stocks in the market. The canaries, you can see in the upper right-hand corner, price lines replaced by bookings, which is the same company, just a different title. And what do you see? You see that the index of this group of leaders has broken down hard below the 50-day moving average. I can look at the stocks that were leaders on June 27th. This market held up so long that these stocks were still acting well until the last week or so, and they broke hard on Friday below the 50-day moving average. And then my melt-up leaders from early January, I picked these right before the market rolled over, and one can see that they too have broken down below the 50-day moving average. So when I see that, I know that there is some fairly broad weakness in the markets. Now, all it takes is 1 or 2 good days to see some reversal, and we are due a reversal. That said, we could run right back up to the 50 and roll over again. Know your news and earnings dates. Nothing on Friday, but you could see a relatively modest news week this week. I guess following Friday will be unemployment numbers. And then if I look at know your news and earnings dates, there are still some earnings left. You've got CNOOC, Constellation Brands, Worthington Industries sometimes gives you input into steel. Ollie's Bargain Outlet, BlackBerry, that's a fallen name. Lululemon, Red Hat. So there's a number of paychecks of substantial companies and common companies. As I say in the lower right-hand corner, it's judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So what are my thoughts? I think we are at a critical junction. The bull case, still just a correction. We are at natural bounce locations, as I pointed out. Bucket suggested imminent reversal. 13-week new high has undercut the February reversal point, and no sign of a recession, which might change the paradigm. The bear case, no bear markets ever occurred without first breaking through the 200-day SMA, so the fact that we're breaking through or at the 200 doesn't mean it can't go lower. Fib retracements, we're at 50%. Who says they can't go to 100? The markets are not having any confidence in the new Fed head. He talks, market falls, that's bad. Rates rising, debt increasing, Trump being Trump, tariffs concerning, and then news flow killing all bull runs. Now, Trump is one that likes to talk about how he uses some of his crazy ideas or extremism like the tariffs as a bargaining chip. And I already saw some things this evening where there's some back channel discussions with China now trying to avoid the tariffs. News flow seems to kill all bull runs. Whenever it looks like the market is going to move higher, news sort of kills the market. Now, I'm getting my boxes ready. I'm going to tell you about the boxes because the boxes are how I play reversals, and it's not a time to be complacent with your money. So here is Woody's, not really 9-box matrix, but the 11-box matrix, where Woodward put together a matrix 1 through 9 based upon current earnings rate, looking at the last 2 quarters, and then 5 years of annual earnings rates. And then you have different boxes, and you could see if you're growing at 100% per year, you should double in 1 year, 50% double in 2 years, 25% double in 3 years. Box 7 would be stocks that have great quarterly earning growth, but stub their toes, and they may not have great annual earnings growth over the last 5 years. These boxes turn out to be a great way of finding leaders. I can look in 3 different decades. First brought it to our attention in the late 90s, where he built a grid of the leaders in the market based upon the 9-box matrix. The bottom of the market was on 10/15/98. The run stopped January 22nd. There were 190 stocks in the matrix. The average return on these 190 stocks was 67%. And you can notice that box 1, 2, and even box 7 had some of the highest rates, 102% on box 7. Well, that's good. Well, what does that tell me? How about 2011 or 2010 and 11? Bottomed on the market was 9/1/2010. Boxes were ran and came up with a list of stocks in the boxes. Top of the market was April 29, 2011, and you could see that where the S&P had a great run up 24%, box 7 stocks were up 106%, box 1 stocks were up 125. And then here's that same time frame, and you could see the S&P is down here. And then there really was some benefit in the boxes. How about 2013? This was a list of stocks, ERG 240 and boxes. And then the market bottomed on June 23rd. If you bought stocks June 24th, held them less than 2 months to August 14th, one could see the all box stocks were up 16% versus the S&P up 6.8%. And for example, box 4 was up 31%. So the message here is box stocks or stocks with strong earnings are places to look at market bottoms. If we have a reversal there, then I'm going to be looking at my boxes. Now, you might be saying to yourself, but Jeff, how do I make the boxes? I'm going to show you. Here's how I make the boxes. I start with all securities. I have a filter, which will say something about box stocks. Hopefully, let's see. All right. ERG 240 filter for boxes, ERG 255. So let's find ERG 240 filter for boxes. So this filter last close over 2, 50-day DMA over price and volume, and your rank has to be 240. Okay. So that gives me in the database only 225 stocks. Now, we'll get that into a warehouse view. So now I've got 225 stocks, and they're all high ERG. Now, one thing you'll notice, they don't all have boxes. So how do I come up with the stocks that are box stocks? Well, what I do is I click on the pie. I go into this. Actually, I go up where the slices are. And find HGS box stocks. And this automatically puts those 200 and some stocks into the boxes. You'll see that 118 are not in the box. And I can see which stocks are in which boxes. And I could start to buy baskets of stocks, or at least start fishing where the money is good. Now, the other thing that's cool is I can now go here, go under user groups, and let's just put box stocks, Sunday, $3.25.2018. And what it's going to do is it's now created for posterity's sake, or for me to come back and look at it, box stocks, and the fact they broke out the box 1s, 2s, 3s, 4s, and so on and so forth. So I will be watching performance of the box stocks to get a sense if this market was going to take off. So go back in here. Let's go to Woodward and Brown user groups, Major Market Plus, warehouse view. Hit a T1 top-down view, and what do I see? I see that bonds, oil, gold, bonds, gas, silver, commodities, and volatility were the strength of the market, where the major indexes were the weakness. No surprise, most of the user groups that I put together were down about 5% last week if there was no stops or any kind of protection put on. And if we look at some of the major indexes, S&P 500, as we saw, it's sitting on the 200-day moving average. The Dow and Jones Industrials, almost down to the 50. The NASDAQ. Now, when I first looked at this, I said, well, it doesn't look that bad. But it's bad. And then the Russell 2000. Breaking down hard. So this is a market that is clearly breaking down. Try to look at the futures. They look like they're bouncing all over the place. And as I said, even if the futures are up right now, the way this market has been going, God knows if they'll be up tomorrow when we wake up. So indexes look weak. The natural place for the market to hold is right here. And I really look at the S&P 500. That's a line on the sand. So a lot of my family members put too much faith in me. Had all kinds of questions about what they should be doing in the market. And I looked at it and I said, well, it's pretty simple to me. And what I told them that this is a pivotal day coming. Doesn't mean it's going to do anything. Here's the prior closing low. We are, let me do that one more time. We came down, although we did punch below it and close up here. We are really sitting not only on the 200, we're sitting at the prior closing low. This to me is a place of support. It's also where we broke out from, back here. This to me is a critical place. We'll see if the market can hold and go up, move from here. What happens if it breaks down? Well, we haven't had a bear market in a long time, and maybe that's where we're going to go. Now, some people who came to my meetings know that I like to take the S&P 1500, which is probably in front of my face here, and go on a weekly view. Let's see, I don't know if I even have them and put this on. And what I've been telling, what I told people at my meeting is that as long as my price closes above this band set of moving averages, that I'm still bullish. And as long as the moving averages are not doing this, where they're rolling over, I'm still bullish. And the moving averages look great. We're way above price. The other thing I added was a MACD. I haven't looked at this one. And even my MACD, although it's crossed over a sense of weakness, I'm looking for the MACD and my price to stay above the moving averages and above the zero line. And the break of those points is when I go short. I don't see, I think this market can go higher. I've given you the evidence. I talked about why it may not go higher. Eventually we're going to break down. But this market's been behaving for a long time, and we're still in an uptrend. So that's my penny of thoughts, pennyworth thoughts, and I'm still long. But what does it really mean? It means I raised cash. I sold some calls against my Amazon at 1,600. I have bought puts on some of my positions, and I have less positions, and I'm not doing my chicken shit synthetic or a synthetic and selling puts. Not right now. I may be tomorrow if the market bounces. So I also can go into TradeStation and very quickly look at some of the signals I look at for the market. Now you can guess it's going to be very bearish. So if I look at the E-minis, you have a sell signal here, red paint bars on both daily and weekly, a sell signal on the monthly. So that tells you how weak the markets have been. We are below the lower boundary here, which is a place that we often see bounces. My high jump is now the low jump. I think this is set up to bounce at this point. That's the E-minis. The NQs. So the NQs look like the, let me go back to the NQs here. So the NQs also in a sell signal below the envelope, sell on a weekly, almost at the bottom of the high jump. NQs look like they're ready to bounce, or I hope they bounce. The Russell futures, not nearly as bad, still within the envelope, but on a sell signal. And then the YM, the Dow futures. sell signal below the envelope. So we're pretty oversold right now. I think I've shown it multiple different ways, and I'll be looking for a bump. If I look at the dollar, you can see it's mostly been going sideways of late, but it's in a sell signal. If I look at gold and silver, gold is in a buy signal, and silver also in a buy signal. And then one thing that's been working very well has been crude oil, and you could see how strong crude is getting to the top of its channel. So market's weak, but maybe they're telling us they're getting ready for some kind of a bounce. At least if you're still got long holdings, and I still do, although I'm a little bit more balanced, we can hope for a bounce. And now that 60 minutes is over, I think the futures have popped up a little bit. They're close to 30 now on the NASDAQ and 9 on the E-minis. And one thing to know, if you're not in front of your computer right now, is fair value is such that it's on the Dow, you're going to add about 80 points, 78, 79 points. Let's see what the exact number is. On the Dow, it's minus 78.8. On the NASDAQ, it's minus 28. So you can see at 8:32, the NASDAQ was up 1150. Let's see what happens now. And now it's up.
I'm sorry.
Sorry about that. Was my iPhone, my iWatch, up 33 points. So markets are moving up here. If you're bullish, you got to be happy with that, although it's been tough. So I am bearish the market short term, right? At least I was yesterday and the end of the week. The market looks to me like it's oversold, and based upon a couple of my favorite indicators, such as the 13-week new high, new low, and the buckets, I'm going to bet that the market's going to recover. So the problem is now I got to find what stocks to buy, or do I look and buy ETFs, or do I just sit in my hands and let the market declare itself? And all those have viable ideas. If I look at industry groups, I have 173, and of 173 industry groups, 5 of them have momentum to the upside. Well, that's interesting. Short-term momentum. What about over 5 days? 8 of them. How many have short-term momentum to the downside? Only a couple of the integrated oil and gas services and integrated utilities. But let's look at the 5-day, a little bit longer-term downside. You can see that's where most of the stocks are. When I see most of the stocks sitting at a 5-day force to the downside, that tells me that the market's been weak for more than just a couple of days. All right, so if I want to go long, where am I going to go? I might look at the groups that were leading to the upside and right-click on precious mining. Now, I will say that I'm long gold. I got Nugget, and I actually went into a couple different gold positions this week. And gold looks interesting here, but on the same token, you know, it's been going sideways for a while. Here's Newmont, pocket pivot, Kahuna, mobile breakout from a squeeze, and the weekly bongo turned green. This is Jeffrey's favorite buy signal. Maybe it's different this time. Maybe it goes higher, but it looks interesting. Gold Corp broke above the 50. Again, pocket pivot, Kahuna, mobile breakout, weekly bongo green. Gold Core looks interesting. Barracks further down in the pattern, but did have a positive day. AEM also down in the pattern. So I guess of all these so far, it's Gold Corp I like. Randgold, one of the more expensive gold stocks, down in the pattern. Ashanti, this one showed up on my screen, another cheapie, pretty low in the pattern. So what I like the most here is probably Gold Core, which is breaking out above the 50. And another way of playing these could be Nugget, which is a 3X gold miner ETF, which should look a lot like some of these ETF stocks. And it looks like a lot of them that are down in the pattern. That doesn't look like much, but that's on Wednesday. On Wednesday, the close was 24.12. On Friday, it was about 25, so 80 cents on a 20. That's a 3% move this week. So the 3X guys can move. If this ever breaks above the 200 with any momentum, that might be very interesting. So I do have some nugget, and I picked up some of that gold core. Investment management, these pay a dividend. Longfin is one of these fake blockchain companies. It's not really fake, but it's these companies that turn into a blockchain. This one I've talked about before. Majority owner was on CNBC, takes it public at $2. Then the next day he acquires his own company, which does blockchain, and the stock trades up to 100 plus. And now it's been bouncing around. And even he came on CNBC and says it's not worth it, it makes no money. It's got to run again. I don't even have any idea how come. That was the only one above its average for the index. Cement. These are stocks that had a little move, I guess, with the budget coming in and maybe something about the wall. But these guys had gap ups here on Cemex. Marietta had a positive day. Eagle Materials gapped up. Vulcan gapped up. Problem is they're all gapping up from very low in their patterns, none of which look very enticing to me. And medical equipment, that's interesting. CareDx. The stock's on fire. I don't know anything about it, but uptrend, pullback to the 50 and a breakout with a kahuna. Bible gap up from a squeeze. Let's go to more info from Web. I don't want Yahoo because I don't think it works anymore. Let's see. Oh. Well, I guess they must have lost less money than people would have thought they were going to lose because they had a big move despite a miss on earnings. That's them. Dexcom breaking out here after a long-term downtrend, doesn't have great earnings per share growth. That's medical equipment. And then automotive retailers. It's all about China Logistics, CALI. And here's a stock that kind of find it a little suspicious looking. Back here it's got, let's look at the shares. Trading 3,000 shares a day, 5,000 shares a day, 5,000, 2,000, 7,000, 1,000, and what happened here? 28,000, 6 million shares. So here's a stock that's having huge volume coming in. I usually get burned because I get in too late. But here's a stock that no one noticed. Now all of a sudden, it's a darling. That'll be interesting to see what happens with China Auto Logistics. And going back down the list, that's it from the leading stocks. So I do run a number of scans, and I did come up with some stocks that I liked. Let's take a look at them. Not a lot of them, to be frank. Gold, I'll go through all 25 because there's not very many. You'll see a theme. Gold miners ETF, you can see gold breaking out. We already talked about that. Guess, good earnings. Bible gap up on Thursday, strong again on Friday. This is a stock that used to be a lot more expensive stock, as you could see. It's now broken above descending 200-day moving or 200 weekly moving average. That looks interesting. Gold Spider. ConocoPhillips, I talked about this, I think, 2 weeks ago and again last week. I like what I see here. I liked it better at 54. Here's a stock that sort of a cup and breaking out here above the 50-day moving average. A bunch of kahunas. Weekly bond goes green. great earnings per share growth, pays a 2% dividend. EOG Resources, sort of a V bottom here off the 200, pays a small dividend, great earnings per share growth. The budget bill had a lot of defense stocks. This is what the typical pattern was. Here's Northrop Grumman, uptrend pullback to the 50, pocket pivot, Kahuna, squeeze. Sold off during the day and closed in the lower half of the price bar. I find that bothersome, but I saw a number of defense stocks that looked interesting. Newmont Mining, another miner, struggling to get above the 50. Goldcore we talked about. Another of my favorite exploration plays is Clearwater or Continental Resources. You look at the huge earnings per share growth versus a multiple that's high, but nowhere close to its growth. Broke above the 50 with a couple pocket pivots and kahunas. Gold Trust ETFs gapped up on Friday. Petrobras, as I think of Petrobras, I think of a company that maybe 20 years ago found some amazing deposits. Then I think of a company that has trouble getting the oil out of the ground, all kinds of scandals with their government, kickbacks. You know, we think we see a lot with Trump being Trump, but it's just a mess in Brazil. But this one looks like it wants to break out. It's got good earnings per share growth coming in. Speaking of defense stocks, how about building aircraft carriers? Huntington Ingalls Industries, uptrend, pull back sharply to the 50 where it held with a pocket pivot, a kahuna, and a squeeze. Great earnings per share growth. Prothena is a biotech company. Don't know anything about it. This was another one of my best calls, Ecopetrol. I called it down at 12.5. It's now sitting just below 19. I think it's another good place to run. It's got good earnings per share growth. Energy. Here's where our moms like to shop, or our wives if we're of that age. Chico's FAS. And the reason why I picked it was just seems like it's got a bottoming formation here, not a lot of growth in that stock. Wild Horse Resources, this is a small junior exploration company. Energen is another oil, gas, and coal company. No dividend. What got me excited here was the earnings per share growth coming into the stock. Oxygen Commodities breaking out here. Not sure that's good for stocks. And then Viper Energy. Here's one I like. Uptrend, pull back to the 50. Kahuna, pocket pivots, breaking out, mobile breakout from a squeeze, so on and so forth. Good earnings per share growth. Dynavax, pull back, squeeze, breakout, same pattern over and over again. Floor and Decor, just a strong stock. I actually went into one of their stores down here and was impressed, kind of like Home Depot in the early years. Great earnings per share growth. Statoil, another one of the international oils. Love my pattern that I showed you before in Ecopetrol. This is similar. Here was its gap up with kahunas, pocket pivots, mobile breakouts, and squeeze. Just looks like it wants to run again. When I see zeros and minus 100% for earnings, I figure that they just don't have the data. Canadian Solar, hard to want to be in a solar stock, except look at its earnings per share growth. It's got some great EPS coming, motivated by solar opportunity. This one looks like it's ready to roll. And then I'm not trying to remember what I liked about Mobileye when it came out of my trade station review. So those are the stocks, and they're not much. This was not an easy time for a stock picker, but the message I see is simple. The message I see is look at gold and energy plays, and then I'm going to create my boxes. And what I'm going to do about 3 o'clock, if the market's ripping, I'm going to come in, I'm going to do an update, and I'm going to go down to my boxes, and I'm going to go through them in the warehouse view and look to see how many of them are breaking out. And you can see 1-day performance here, all but one. And I can go through the list of box 1, 2, 3, 4, 5. And I'm going to start to see are any of these boxes starting to break out. Historically, the boxes have worked well for me. So on that note, I think I'm going to say goodbye. Futures are strong still, but I think we've learned over the last couple of weeks, just because they're strong right now doesn't mean they're going to be strong when you wake up in the morning. Have a great trading week. Remember, cash is a position, and I'd rather be sitting on the sidelines in cash than losing money being in the wrong direction. I am still net long. I have bought protection. I've got some short positions and options. I've lightened up on my short put plays where I do my synthetics because I could lose too much. And I will get back in deeper into the market based upon how the market performs the next couple of days. Have a great night, everybody. Thank you, and we'll see you next week. Oh, by the way, I think we all know that no one pays me for this, that I do it because I like to do it. There are weeks when I'm not going to do it. It's funny, I had 3 or 4 people text me or email me asking when my update will be coming out. The reason I don't charge for it is so I keep the flexibility, but I do appreciate the letters and the positive comments. Good luck, everybody. Have a great week. We'll see you tomorrow, or see you soon. Thanks. Bye-bye.